Randy, it is November. Can you believe it? We're a little bit late this month at the end of November, but it's time for the market update.
Great to be here, Mary.
Yeah. So we have TBF Mortgage, Randy Williams, with us today in the studio. Let's just jump into it and see what the CEO of Amherst is talking about, Randy, as it relates to what's going on in the market.
Yeah, I'd say whatever our forecast is, it has a wider range of error than it normally would have, right? We're just at this point in the housing market where I don't think anyone really knows, to tell you the truth. But we can't ignore that inventory remains down 40% since pre-pandemic.
So true. I mean, at the end of the day, it's all about inventory right now and interest rates. And when those are going to find their balance of what they're going to do is market will change.
Yeah, and I think it has sort of found its balance right now. The rates were doing nothing but going up for a very long time. And I think we had our first nice little peel back last month.
Nice.
I think we know that the Fed is going to leave it alone for a little bit.
Yeah.
And I think we've seen our high. And I think, over the next couple of years, it will slowly get back down to, where we wanted to be.
Well, I love that. Well, let's first talk about home prices.
Okay.
When we talk about home prices, this is each of the average of AEI, Zillow, Fannie Mae, HPES, MBA, and NAR are rating the home prices between November, the beginning of November, October, and the end of the year. Average of all six was price forecasts were going to increase by 3.3%, which is interesting. NAR was the lowest here by minus 0.4%, but they're all in the plus, which is fantastic. Now, the estimated price performance December as forecasted in Q3 of 2023, when we look at this based on 23, 24, 25, 26, and 27, so future pacing this out, we're expected to gain, except for 24, where it may be only 2%.
Well, we have a healthy market. I think what gets blasted to everybody out there is interest rates, and they haven't really affected the home prices. And that is the truth. It is, nobody knows about the lack of inventory that we have, and that those interest rates are just balancing it out to find that healthy market again.
Yeah, I'm with you on that. When you even go in and look at, Case-Shiller's home price movement month over month. So this was the last time they published it was in August of 23, to August of, or to July of 23. And you look at these top 20 cities, two of which are in Florida. You have Miami went up 1.2%, and you have Tampa that was up 0.6%, which is month over month is kind of good.
No, I agree. Like I said, I tell every single person that complains about interest rates that they are exactly where they need to be in a healthy market right now.
Fantastic. So go ahead and tell us what Black Knight has to say of the Mortgage Monitor.
For the second month in a row, home price growth trended higher in every one of the 50 largest U.S. markets, mirroring the sharp reacceleration at the national level.
I love that. And he goes on, Selma Hap from CoreLogic goes on to say,
nevertheless, home prices are still expected to reaccelerate and reach mid-single-digit growth rate by the end of the year, according to CoreLogic's latest HPI forecast.
So both the analysts are saying the same thing, which is fantastic. And what they're talking about with future price of existing homes is anywhere with across the U.S., if we put this regionally between Northeast, Midwest, South, and West, the average of that is 2.6% year over year sales price of existing homes. It's not bad. Of course, we sit here in the South, and we're at 3.1%, kind of in the middle right now.
Yeah, I mean, and what does this really mean? It means if somebody that's considering selling my house, inventory is still low, home prices are still going up, I have a little less competition than I would, normally.
Right.
So if I'm somebody that wants to sell, I'm strongly thinking about maxing out right now.
Absolutely. I love that. So let's talk a little bit about affordability right up your neck of the woods.
Right.
So this chart, is kind of scary.
Yeah.
In the fact that it's talking about mortgage rates from 21 to today.
Yeah, what is so scary about this is just the sharp contrast. It really is, but you have to look at this on a bigger level of, where interest rates are throughout the history of our country and when the markets were actually healthy. And people don't get to see that data. They genuinely don't. When we were at 21 rates, the problem that we had, and you know this, you could write 10 or 12 offers for somebody and they wouldn't get accepted because they weren't strong borrowers, but yet they could afford to buy. Right. So the interest rates have just gotten back to the point where, the people that should be able to afford houses now can.
I love that. Yeah. We're going to show that slide in just a minute that you previewed, but some historical perspective on today's mortgage rates when you look at it compared to 2016 through today, we're higher.
Yeah.
But let's look at, Randy, talk to me about 16 to 22. As you see this, we're what, a point or two higher?
Yeah.
Maybe 4 or 5.
Well, we all know what happened in 2007 and 2008.
Yeah.
And it took a very long time to build a healthy economy back up and get out of that mess.
Yeah.
And then, like I said, now the economy, higher interest rates are actually a sign of a strong economy. Like, that's what people don't get. Back in COVID, we had so many people not working and so many people that needed to access money. Where was it? It was in their house for a lot of people.
Right.
So when you hammer those rates down, people got to, kept the economy going. But higher interest rates are actually a sign of a good economy.
Well, we're going to show a slide here that's really going back to the 70s, 80s, 90s, 2010s.
Yeah.
We're not bad. Like you said, 70s and 80s were way less. I date myself, but my first mortgage was 10%, bought a $100,000 home, had a $1,000 mortgage, and I was a little nervous about it. And we had great income, but I was still a little nervous about it.
Well, and so many of our customers are not buying their first house. I mean, we still do get that, but they're not buying. My parents bought their first house at a 17% interest rate.
Wow.
So right now, I mean, obviously we refinance them to a much lower rate, but they look at these rates and just go, okay, fine.
Right.
No problem.
Yeah, exactly. Yeah, because they're used to higher rates. Yeah, like myself. So mortgage rate projections. Talk to me a little bit about this.
Yeah, I think the data that we got last month when the Fed decided to leave it alone, and they are really truly balancing inventory with the amount of buyers, things like that. I think we have maxed out. I think they have pushed it as far as they're going to go in terms of raising the rates. The inflationary numbers are great. The unemployment numbers are great. I know people don't feel like our economy is awesome, but comparatively to the rest of the world coming out of COVID, we crushed everybody.
Yeah.
We really did.
I love that.
Yeah.
I love that. So thinking that those interest rates, if you're thinking about buying or selling and buying, they're going to go down. Yeah. There's a magic number, right, Randy? Yeah. Is it 6%? Is it?
I think going into an election year, the common thought is that we are going to see a nice little peel back. I think obviously that makes sense. Yeah. It does.
It does.
But I'll always say this, like, be careful what you wish for. If you want lower interest rates, you're going to get a higher price on the house. Because it is more competition. So many of our buyers right now are so smart. They're like, I don't care what the rates are. Those are going to come down over time. I will refinance over time. Mm-hmm. I want to get the house without an enormous amount of competition, and I want to get it at the price that I want it at.
Yeah.
That's today's buyer.
Yeah. So, let's talk about this a little bit, homeowners equity, because you just mentioned it. One of the things we at the Bartos Group do if you're in Southwest Florida and you want to take a look at your equity, we have an equity assessment report. And really what that helps you do is decide, if I sell, how much money could I move? What would be my taxable rate if you live here full time or if you're part time, those kinds of things. And that's really something that we offer to you in this kind of crazy market that we've come through, because you may be looking at numbers, but maybe they're right, maybe they're wrong. I don't know. We should take a look at that. But if we look at housing market in Southwest Florida, Randy, I love this slide because I put it based on the entire MLS, then Naples, Marco, and Lee County, because we have people in all of those areas. And if you'll notice, the one thing is that in 2018, we had a ton of inventory. And that wasn't even that much, because when I started in this business in 10, we were almost at a 10% inventory. It was shocking. Mm-hmm. We're not there. When I start to look back at months of inventory we have, we'll show you in a minute. But the one thing I want to do about all of these slides is it shows you in 2023 for most of them that we are around our 2020 numbers. You know, Lee County is a little bit higher. They're closing in on what we had in 19. But if you look at Naples and Marco, we're around those 2020 numbers of inventory, and that's still pretty dang low.
Yeah, when you see a 21 like that and those numbers like that, look, obviously the whole country was going through something that was just, what you would call an act of God. That's an outlier. Now that it's coming back to where it is, I mean, one of the things, like I said, we always do is we just keep learning from our clients. Those people up north every year want to come down and when it's cold. I mean,
right.
Every year they want to come down for this warmth and this area and the lifestyle that you have here. So, like I said, I hope inventory continues to rise for everyone's purpose.
Well, and I like to tell this to people because you may not know, inventory, people put their homes on the market in a peak in October, in a normal market, and in January. Yeah. And then we go, it kind of finds its balance between there. But those are our two highest peaks. So when my customers come to me that are listed their home and say, oh my gosh, all this inventory came on after I listed. Well, it's to be expected because we're going to see that between now and January. And then the buyers come in and then the inventory goes down. So, don't worry if you're on the market, don't freak out about that. But if you're thinking about going on the market, you have some perspective. When I look at months of inventory, so there are 12 months in a year, you can imagine the closer I get to 6, 7, is a balanced market. When I'm closer to 0 to 1, it's a seller's market. When I'm at 12, it's a buyer's market. We're pretty stable. Here in October of 2023, the numbers I was looking at were 5 months across the entire MLS. If you're in a different market, in a different community, it may be more for you. But across the entire MLS, it was 5 months. And then look at February of 2019. In this most recent 5-year period, it was more, 7.7 months.
Yeah, I mean, I look at this and, if I'm a seller, I look at this data and every historical data that we have says it's still a really great time to sell.
Yeah.
It really is.
And great time to buy.
Yeah, you have less competition than you ever have. And that's great. I mean, and we have more buyers that are continually coming down here. So you can max out your home value right now if you wanted to sell.
I love that. So I wanted to share with you guys a little bit of a tidbit because if you are thinking about selling, if you're thinking about buying, you can still get a mortgage, and Randy is happy to help you through that process. But I want you to know that when we come from 20 to 23, our cash buyers have, Randy, grown by 20%. In 20, we were about a little less than 40. Well, it makes sense. Interest rates were low. If we can get free money, that would make sense. But now we're over 60% of people that are buying homes with cash, of just working with us, the Bartos Group.
Yeah, but my numbers are up too, though. Like I keep going back to this, but we learn a lot from our clients. These people are, very successful people. Yeah. I have a lot of people that could pay cash for these houses, but don't want all of their money tied up in an equity. They want to do something else with it. They want to buy other houses, things like that. Like I said, a mortgage is still an option for a lot of people that just don't want all their equity tied up in their house.
You make a great point. I was out with somebody on Wednesday, and he looked at me and said, why would I put, all this money into a house, then I can't use it? And spot on. Yeah. So, I want you to know, really, if you're thinking about moving, is it time to move? Is it time to buy or sell? What do you think, Randy? Is it time?
I think the business, our numbers will tell you that the economy is there, and our buyers, I know you're busier than ever, and I am as well. We live in one of those great places right now that the inventory is low and the demand is still there.
Well, you heard it here first. I'm Mary Bartos with the Bartos Group of Premier Plus Realty and
Randy Williams with TBF Mortgage.
And we hope to offer you that home equity report. If you're interested in it, click on the link below. We'd love to come in and help you see what your home value is and what you could take out of it if you chose to move or do something else with it. Until next time, we look forward to seeing you.